Today we're diving into a major Indian stock, Tata Consumer. Now, you can't truly understand a stock without a solid, fundamental deep dive. As investors, we're always hunting for long-term value, but if you're a trader, you're likely looking for high volatility and strong momentum. While technical charts are great for short-term moves, my goal today is to give you the full picture, something that works for both traders and investors alike. We're going to start with a high-level fundamental overview before moving into an in-depth technical analysis. We'll walk through the historical charts, look closely at the current market momentum, and I'll even share my target price predictions for the future. So, whether you're here for a quick trade or a long-term hold, we've got you covered. Let's start by looking at the big drivers behind Tata Consumer right now. This company is a classic long-term growth story. It is transforming from a basic commodity player into a massive, brand-driven FMCG powerhouse. Now, I have to be honest, the valuation is a bit expensive, with a PE ratio over 80. However, with strong cash reserves of 1,000 crore and the trusted Tata brand behind it, there is a serious safety net for shareholders. Let's jump into the details. Here are the 5 key things you need to know about Tata Consumer's fundamentals. First, the company has completely transformed. They've moved beyond just selling tea and salt to become a major powerhouse in the daily essentials market, focusing on products that are growing fast. Second, they are diversifying what they sell by expanding into things like spices, pulses, and ready-to-drink beverages. These growth businesses now make up nearly 1/3 of their total revenue in India. Third, they are getting their products everywhere. Through an aggressive strategy, they are expanding their reach into thousands of smaller towns and villages across the country. Fourth, they are focusing on premium products. By using famous brands like Starbucks and selling high-end versions of salt, they are getting customers to switch to more expensive, better quality items that bring in more profit. And finally, they have very strong financial backing. Even though the stock price is considered expensive right now, the company has very little debt and the solid reputation of the Tata brand behind it. My analysis today is based on the Wyckoff Method. This is a famous strategy created by Richard Wyckoff over 100 years ago. Unlike common tools like moving averages or the RSI, which often lag behind the market, Wyckoff looks at leading indicators specifically: daily price action and volume. The entire strategy is built on 3 core laws. First, the law of supply and demand. This is the engine of the market. Simply put, if more people want to buy than sell, prices go up. If there's more selling than buying, prices go down. Second, the law of cause and effect. Market trends don't just happen by accident. You look for a cause, which is usually a period where the price moves sideways. This buildup of energy eventually creates the effect of the next big trend. And third, the law of effort versus result. Here we look for harmony. We want to see if the trading volume, the effort, actually matches the price movement, the result. Let's see how these laws are playing out on the chart right now to give you the full picture. Today we're looking at the monthly chart for Tata Consumer, going all the way back to the start of 2003. This gives us nearly 25 years of data to analyze. On this chart, every single bar represents the price movement for 1 full month, and the bars at the bottom show the total trading volume for that same month. We're going to use the Wyckoff Method, which is simply a way to study how a stock moves through different phases. Instead of just looking at daily ups and downs, we track the price action over a long period. There are 4 main stages in every market cycle: accumulation, markup, distribution, and markdown. This is the framework I use for all my case studies because no stock ever goes up in a straight line forever. Cycles are just a natural part of the market. Today, we'll apply this to Tata Consumer's 25-year chart to see exactly where we stand. Looking back at the year 2000, the stock started at just 11 or 12 rupees. Between 2003 and 2006, it climbed from 12 rupees all the way to 88 rupees. It moved upward at a steady 45-degree angle, which was a clear sign of a strong uptrend right from the start. After that big move, the stock began a phase called accumulation. If you look at the yellow boxes on the screen, you'll see the price moving sideways for a long time. In this chart, I've used pink arrows to show the markups where the price jumps in yellow boxes to show these sideways movements. What's interesting is that for the last 25 years, the stock has followed a consistent pattern. It shoots up, takes a breather to consolidate, and then climbs again. We've seen this happen 5 or 6 times, and every single time the stock finishes its pause, the price pushes even higher. This repeat behavior is a fantastic sign of a healthy growth stock. Tata Consumer is a well-known growth stock. We already covered the basics of the business, so now let us take a deep dive into how it has performed over the last 5 years. The big question we want to answer is, should you stay in the stock or get out if you're already trading it? Looking at this monthly chart, it's clear the stock is in a strong uptrend, which gives us confidence that it has more room to grow. The most important thing to remember is that stocks never move in a straight line. They always take breaks. During these pauses, smart money investors might take some profits. Some people decide to leave, and new investors jump in. This is just a natural part of the journey upward. Now, let's switch over to the weekly chart. On this view, every bar shows us one full week of price movement and trading volume. We're going to apply the 3 main Wyckoff rules here: supply versus demand, cause versus effect, and effort versus results. Looking at the period from 2021 leading into early 2026, we can see some very clear patterns. Back in early 2021, the price climbed to 859 rupees before it stopped to recharge in an accumulation phase. During this time, the price hit a low of 628 rupees in early 2022 and found another bottom at 669 in March 2023. As you can see in the yellow box, the stock stayed in this sideways zone for a few years. Eventually it broke out and shot up to 1,250 rupees, what we call a buying climax. Since the start of 2024, the stock has been resting again, moving sideways in consolidation for almost 2 years. We also saw what's called a test activity. This is a very important moment during accumulation, where big, smart money investors check to see if there is still a lot of selling pressure left in the market. This happened at the start of 2025 when the price was around 894 rupees. VE highlighted it here in the red oval. After that test was successful, you can see that the price and the volume started working together perfectly. From that low point, the volume picked up and the price began to climb. Every time the price hit a low, we saw a huge spike in volume, around 20 million shares. This is a clear sign that smart money was stepping in to buy and collect more of the stock. After the successful test at 894 rupees in January 2025, the stock finally began its upward move. It climbed to 1,066, took a small dip, then surged again, moving from 923 up to 1,171 by May 2025. However, the stock is currently hitting a ceiling or resistance between 1,220 and 1,250 rupees. It's trying hard to break through this level but hasn't quite made it yet. The good news is that the price movement and the volume are perfectly in sync, which is a very healthy sign. Based on all the energy built up over the last 4 years, we can now calculate a target price. Looking ahead, I expect this stock to reach a range of 1,900 to 2,260 rupees in the coming months and years. If you're new here and want to master the markets with a professional edge, make sure to subscribe and hit the bell icon so you never miss an update. Whether you're trading or investing, I'm here to help you do it like a pro. I'd also love to hear from you. Drop a comment below with your feedback or tell me which stock ticker you want me to break down next. Every like and subscription helps us reach more traders who need this Wyckoff perspective. So let's grow this community together. Thank you so much for watching. Happy investing.